Good morning, students. Welcome you all once again on the FR lectures. Students, today we are going to start another asset-based standard. So far, we have covered Ind AS 16 property, plant and equipment. And you must have remembered that I told you that Ind AS 16 property, plant and equipment was a very important standard. And in the next standard like Ind AS 40, Ind AS 38, so we will be again repeating or we will be revising some part of Ind AS 16 in this standard itself, right? So if I talk about Ind AS 38, we have already covered around 40 to 50% concepts in Ind AS 16, right? So in your examination preparation, when you have to do the revision, start with Ind AS 16, then Ind AS 38, then Ind AS 40, and whenever you are covering Ind AS 38 and Ind AS 40, you will be revising the concept of Ind AS 16 as well, right? So read the standards in these sequences if you want to do an effective study. So students, today's topic is intangible assets, right? Like PP was a tangible asset, it is an intangible asset. First of all, let's discuss the framework, right? Or what all are the standard which is available on intangible asset, right? In accounting standard, in AS, we have AS 26, correct? AS 26, which talks about intangible assets. I believe all of you would agree with me. AS 26 was an intangible asset. It talks about intangible assets, right? It talks about intangible assets, correct? Ind AS, first of all, let me talk about IFRS. In IFRS, there is a IAS 38, International Accounting Standard 38, which also talks about intangible assets, same title. Then in Ind AS, we have converged IAS 38 into Ind AS 38, which again talks about intangible asset, Friends, these are the three standards in accounting standard, IFRS and Ind AS. If I talk about the difference between IFRS and Ind AS in terms of intangible asset, there is no major difference. But if I talk about the difference between accounting standard and Ind AS, there are a lot of differences between these two standards. Okay. So now let's begin the journey of Ind AS 38 intangible assets, right? Ind AS 38 intangible assets. Let's talk about this standard. Let's delve into this standard. Let's understand this standard in detail. So far, many students have joined. So let me call out the students who have joined. So good morning, Avrikesh, Anila, Tushar, Dhanya, Mamta. There is a Motorola Moto 5Z. I don't know the name of that student. Niranjan, Nisha, Sumit, and few students are there on the portal. Rajat, Prabhat, Rahul. So good morning, students. Once again, a very good morning to all of you. Students, let's talk about intangible assets. As the name suggests, intangible asset. So what is the first impression you have? And how it is different from tangible assets? How this intangible asset is different from PPE, property, plant and equipment? Any answer? Any answer? So Rajat is saying that, sir, we can see tangible asset. However, we cannot see intangible asset. We cannot touch intangible asset. You are right. Abrikes is saying, sir, intangible asset does not have a physical existence. You're absolutely bang on, Abrikesh. Prabhat is saying the same thing, that sir, intangible asset does not have a physical substance. Means we cannot see, we cannot touch, right? We cannot see, we cannot touch intangible asset. Okay. So it means tangible asset like building, furniture, okay, your machinery, vehicle, car, scooter, okay, office equipment, printer, computer, laptop, these all are tangible assets. What is the example of intangible assets? What is the example of intangible assets? Yes, software, goodwill, copyright, patent, IPR, trademark. These are the example of intangible asset. Licenses, these are the example of intangible assets, right? Okay. So we have a fair idea that how these intangible assets are different from tangible asset. Okay. What are the intangible assets? Now let's see what all is there in Ind AS 38 to read and to discuss and to understand. Students, first we'll talk about the objective and scope, which is a theoretical part, that why this standard was notified, what are the boundaries of this standard. We will be covering objective and scope, theoretical, not relevant from the examination perspective, but yes, to begin with, we will touch on the objective and scope part. Intangible asset definition, very important. Like I have spent some good time on the definition of PPE. I will spare good time on the definition of intangible asset itself. It is very important to understand. Recognition criteria I'll discuss. Then we'll discuss initial recognition, right? So at the time of initial recognition on the transaction date, right? When this intangible asset is going to be recognized, how it is going to be measured, at what value, right? Then we will be talking about the measurement of intangible asset in case the intangible asset is acquired through various modes. For example, if intangible asset has been acquired through government grant, the government has given some intangible asset, the government has given some rights free of cost, then how to measure those intangible assets? For example, the company has acquired another company, the company has done merger acquisition, and due to merger acquisition, the company has got some intangible assets like goodwill. So how to measure that intangible assets, right? Internally generated intangible asset. How to measure those internally generated intangible asset? How to measure intangible asset in case of exchange of assets? The company has got some intangible asset, and instead of paying money, the company is paying in some other assets. You remember, we have covered the concept of exchange of assets. You remember, we have covered the concept of exchange of assets. Yes or no? In property, plant and equipment. Whomsoever has attended my lecture on Ind AS 16 PPE, he must have understand the concept of exchange of assets. Fair value of asset given up is the cost of the value of asset acquired, right? So same concept we will be repeating. I'm not saying we will be discussing. I'm saying we will be revising and repeating the same concept in Ind AS 38 also. You remember, we have also covered the concept of deferred payment terms. When PPE is acquired on the deferred payment terms, and we have also done one illustration on that. Again, we will be repeating and revising the same concept of deferred payment terms in Ind AS 38 as well. So then we will be talking about subsequent recognition, subsequent measurement. You remember, we have covered cost model, revaluation model. Yes, cost model, revaluation model. Carrying amount is equal to cost minus accumulated depreciation minus accumulated impairment losses in case of cost model. In case of revaluation model, your carrying amount is equal to revalued amount minus subsequent accumulated depreciation minus subsequent accumulated impairment losses. Right? Suna lag raha hai? Suna lag raha hai? Is it something which is heard or is it something which is blank? Heard? Okay, very good. Very good. So we will be again repeating and revising subsequent recognition. Okay, subsequent measurement means at the reporting date. Then we will be talking about, like we have discussed depreciation in Ind AS 16, we will be talking about amortization in Ind AS 38. Okay. So you remember the name of depreciation is amortization in case of intangible asset. Okay, for tangible asset, the word is depreciation. For intangible asset, the word is amortization. Okay, we'll be talking about amortization and useful life of intangible asset. So a new concept is there in intangible asset. We will be talking about the useful life of intangible asset because it is important to compute the amortization of intangible asset. Right, friends? So I believe if I need to summarize the agenda, we will be talking about the accounting treatment of intangible asset. Accounting treatment means initial recognition, initial measurement, subsequent measurement, amortization, and and your derecognition as well. Okay. So this is what I'm going to cover in the next 2 classes, in the next 6 hours on this particular intangible assets. Okay. So whomsoever have already attended Ind AS 16, right? Please focus on the next 2 days, which is today and the day after tomorrow. You will be able to revise your concept of Ind AS 16 itself, right? So by attending this standard, you will be revising Ind AS 16 and you will be learning Ind AS 38. So there will be a dual benefit of attending this 2-day session on Ind AS 38, right? So students, I hope the context is clear to all of you, right? I haven't started Ind AS 38 yet. I'm going to start, but I believe the context is clear to all of you. I can see many students have joined now. So good morning, Khushi. Good morning, Hemant. Good morning, Usha. Good morning, Karthik. Good morning, Zini. Okay. So good morning, guys. Yes. So now what is the objective? The objective is quite simple, that how to deal with the accounting treatment of intangible asset. So this standard prescribes the accounting treatment for intangible asset, which are not dealt in another standard. So friends, this is like a residual standard. This is like a residual standard, right? If a particular standard does not deal with the accounting treatment of intangible asset, then the accounting treatment will be covered. Accounting treatment will be covered under this particular standard, right? For example, have you heard about deferred tax asset? Deferred tax asset. Whether deferred tax asset is an asset, answer is yes, it is an asset, right? So deferred tax asset is an asset. The company is creating a deferred tax asset. Why? Because when in the initial years, if the company has paid high taxes, okay, and in the future, the company will receive the benefit of those high taxes which the company has paid in initial years, right? So then in that case, the company will make a deferred tax asset. यही होता है ना, deferred tax asset. Deferred tax asset means the company will be able to receive the future economic benefit by offsetting the taxes paid in earlier years in the future years. Means in the future year, the company has to pay lesser taxes. Correct? Okay. Friends, whether deferred tax asset is a tangible asset or intangible asset, it is an asset, right? Either an asset could be tangible or it could be intangible. What is the nature of deferred tax asset? What is the nature of deferred tax asset? Abrike, Zini and Mamta is saying, sir, intangible asset. How many of you agree with them? Usha is saying intangible asset. So everyone is saying intangible asset, right? Everyone is saying. Vignesh is saying intangible asset. So nothing is notional. It is intangible. Right? Yes. So deferred tax asset is an intangible asset. You all are right. That deferred tax asset is an intangible asset. You all are right. Okay. Hemant is also saying intangible asset. Khushi is saying intangible asset. Not a notional asset, intangible asset. Now the question is, if deferred tax asset is an intangible asset, do we need to cover these deferred tax asset under Ind AS 38? Nisha is saying no. You're right, Nisha. So we are not required to cover deferred tax asset in Ind AS 38. Why? Because there is a separate standard Ind AS 12. Ind AS 12 deals with the deferred tax asset, with the deferred tax. Okay. So the name is income taxes. The title of Ind AS 12 is income taxes. It deals with deferred tax. So friends, the deferred tax asset, which is an intangible asset, it is dealt by Ind AS 12 and hence it will not be covered under Ind AS 38. I hope now it is clear to all of you. The second example, Infosys is dealing with software. Infosys is manufacturing software. Whether those software will come under the definition of intangible asset under Ind AS 38. Infosys is manufacturing software and selling software. Whether those softwares are intangible asset, answer is yes. But whether those softwares will be covered under Ind AS 38, answer is no. Vignesh is saying no, sir. Why? Because Vignesh is explaining, sir, it is an inventory. It means those intangible assets which are manufactured and sold by Infosys, right? So while these are the intangible assets, but these intangible assets are dealt in by Ind AS 2, which is inventory standard, Ind AS 2, and hence these inventory in the books of these intangible asset in the books of Infosys will not be covered under Ind AS 38. It will be covered under Ind AS 2 inventories, right? So friends, this standard is a residual standard. If any intangible asset will not be covered under any specific or particular Ind AS, then it will be covered under Ind AS 38. Okay. So this standard also talks about the recognition criteria like we have discussed in Ind AS 16. This standard also talks about the recognition criteria. This standard also talks about how to calculate carrying value on the date of balance sheet. You remember cost minus accumulated depreciation minus accumulated impairment losses, right? So this is what this standard also covers. And this standard, like other standard, also covers disclosures of intangible assets. Friends, coming to the scope, as I told you, if a particular intangible asset is not dealt in by any specific standard, it will be dealt under Ind AS 38. So this standard shall apply in accounting for all intangible asset except financial asset. Why? Because separate standard is there. Exploration and evaluation assets. Why? Separate standard is there. Expenditure on the development and extraction of mineral oils and reserves. Why? Because separate standard is there. Intangible asset arising from insurance contract. Why? Separate standard is there. Intangible asset covered by another standard like intangible asset held for sale, deferred tax asset, inventory, leases, employee benefits, business combination. So these are dealt by specific Ind AS and hence it is not dealt by Ind AS 38. Sir, do we need to remember this? Answer is no. Right? Sir, whether in examination question will come on this. So you just need to understand. You are not required to remember these things. Okay? Because when you complete your CA final curriculum, you will be able to understand, oh, financial asset, it is covered under Ind AS 32, 109. So it is not under Ind AS 38. Inventory, Ind AS 2. Deferred tax asset, Ind AS 12. So you will be able to remember all those aspects. Now, friends, intangible asset. So if I talk about the recognition criteria, the accounting for intangible asset. So accounting for intangible asset needs a higher degree of evidence, needs a higher degree of conclusiveness, okay, in terms of recognition of intangible asset. Why? Let's say I have the mobile. Okay. So mobile is in my possession. Mobile is a tangible asset. So I can get the benefit of this mobile, since mobile is a tangible asset, it's a physical asset. But if I have a copy of a license, right? If I have a copy of a license and that copy of license is not in my name, right? Can I enjoy the benefit of that license? Can I enjoy the benefit of that license? So friends, this license is like an intangible asset. License is like an intangible asset. One need to demonstrate that what kind of benefits will flow from that license, to whom this license belongs to, who has a control over that license, right? Because license is not a physical asset. License is not a physical asset, right? I am living in a house. It is a rented accommodation, for example. I am living in a house. It is a rented accommodation. So I am having possession of that house. So I don't need to demonstrate that this house is giving me future economic benefit. Of course, I'm using this house, I'm getting the benefit. But for an intangible asset, since you are not showing, since this intangible asset does not have a physical substance, so it is difficult to demonstrate that future economic benefit will be received, and hence higher degree of evidence and conclusiveness is required in case of intangible asset. Why? Because of its nature, है ना? अगर कोई फिजिकल एसेट होती तो बहुत इजी होता है ना, कि देखो ये एसेट है, मैं इसको यूज कर रहा हूं, इससे फ्यूचर इकोनॉमिक बेनिफिट आ रहा है, करेक्ट? But for intangible asset, since no one can see that, no one can touch that, no one can hold that, so it is difficult to demonstrate, right? Friends, that is why you will find that while discussing the definition of intangible asset, it requires a higher degree of a judgment. It requires a high degree of evidence to conclude that yes, this is an intangible asset. Why? Because of its nature. Because of its nature. Correct? Is that right? Is that right? Okay. So friends, before discussing the intangible asset, let's discuss the definition of an asset. What is the definition of an asset? Asset is a resource. All the assets are resource. Asset is a resource controlled by an entity, result of past events. Asset is a resource controlled by an entity, resulting from past events, and from which future economic benefits are expected. So three important words. Asset is a resource controlled by the entity. So control is important. You remember, always asset is a resource and liability is an obligation. Asset is a resource, liability is an obligation. Liability means you have to pay out. Asset means you have to receive something. You have to receive the future economic benefit. So friends, asset is a resource controlled by an entity as a result of past events, because in the past you have done some act, you have purchased that asset probably, and from which future economic benefit is expected, right? On the same lines, you will find that intangible asset, while discussing the intangible asset, it also demonstrates that control should be there, future economic benefit is expected, right? So these aspects we will be covering in the definition of intangible asset as well. Okay. Now, what is the definition of intangible asset? An intangible asset is an identifiable non-monetary asset without having physical substance. Three part. An identifiable non-monetary asset without physical substance. Let me ask one question. Whether PPE should be an identifiable asset? Whether PPE should be an identifiable asset? Yes, PPE is also an identifiable asset. Whether PPE is a monetary asset or a non-monetary asset? Whether PP is a monetary asset or non-monetary asset? PP is also non-monetary asset, right? PP is also non-monetary asset. Inventory is also non-monetary asset. Investment property is also non-monetary asset. Debtors are monetary asset. Cash is monetary asset. Fixed deposit is monetary asset, right? So, Abrakesh, I will explain what is meant by non-monetary asset. But for the time being, an identifiable non-monetary asset. PPE is also an identifiable non-monetary asset, right? So tell me, what is the difference? So what is the word in this sentence which differentiate between PP and intangible asset? इस पूरी लाइन में ऐसा कौन सा वर्ड है which differentiate PP and intangible asset? Without physical substance. PP is having physical substance. Intangible asset is without physical substance, right? If this word would not have been there, if this word without physical substance would not have been there, probably there will be a big confusion between the tangible asset and intangible asset, right? The definition, from the definition perspective. But that is why the definition made it very much clear that, please, intangible asset are those assets which does not have a physical substance. PP has a physical substance. Okay, it is a tangible item. It is a tangible item. Correct? So an intangible asset is an identifiable non-monetary asset without having physical substance. Friends, let's discuss this definition. Let's discuss the definition one by one. Okay. Now, let me take you to my Excel file, and there I will be discussing this definition in detail. I believe the Excel file is visible to all of you. Friends, now the journey of intangible asset has been started. Okay. We are talking about intangible asset, and we are starting our agenda with definition. Correct? Any question? Any question so far? Any question so far? I can see a lot of students, new students have also joined on the portal. Like Pooja is there. Few more students are there. Okay, friends. So we have discussed the definition of asset. Okay, we have discussed the definition of intangible asset. Okay. So friends, we discussed the objective part. Objective, refer PPT. We have covered this in PPT. Then we discussed the scope part. Okay, refer PPT. Now, definition of asset, we have also discussed. Definition of asset. What is the definition of asset? Asset is a resource controlled by the entity. Asset is a resource controlled by the entity plus what? Resource controlled by the entity as a result of past event, as a result of past event, as a result of past event. And what is the third leg? Resulting in future economic benefit as a result of past event, which provides future economic benefit, right? Which provides future economic benefit. Okay. This is what we have understood. The definition of asset since ages, since class 11. What is definition of intangible asset? What is definition of intangible asset? Definition of intangible asset is identifiable plus identifiable non-monetary asset, right? Identifiable non-monetary asset without physical substance, without physical substance. Identifiable non-monetary asset, identifiable non-monetary asset without physical substance. Okay. Friends, there are three legs. Okay. Identifiable, identifiable, then non-monetary asset, and without physical substance. I'll discuss these three parts one by one. Okay. Fair? First, I would like to discuss the most simplest part, without physical substance. And I need to cover some concept in without physical substance as well. The first part, without physical substance. Without physical substance. Without physical substance means no physical existence, Just give me a minute. Yes. Without physical substance means no physical existence, like PP, like PPE, investment property, land, building, okay, investment property. We cannot touch, see, and hold. Okay, we cannot touch, we cannot see, we cannot hold. So this is the meaning of without physical substance. Now I have a question. Okay. For example, if there is some tangible and intangible asset, right? For example, computer and laptop in which operating software are there. Computer and laptop in which operating software are there. Computer and laptop in which operating software are there. Right. Computer and laptop you can touch, you can see, you can hold. Like I'm teaching on my laptop. I'm pressing the keyboards, right? I can shut down my laptop. I can keep my laptop in my bag. I can solder my laptop. Okay. I can feel the laptop. I can touch, I can see. So laptop is a tangible asset. In this laptop, there are some softwares like operating system, Microsoft Windows, like I'm using MS Excel, right? So this MS Excel is an operating software. Now my question is, this MS Excel is a software, this operating system is a software, computer laptop is a physical asset, it's a PPE. My question to all of you is, in this case, computer and laptop in which operating software are there, do we need to split between the tangible asset and intangible asset for the purpose of recognition and measurement? And please give me the answer. You all are CA final students. Please give me the answer from the practical purposes. Please give me the answer from your practical judgment. Because you guys have attended some audits. You guys are working in some chartered accountancy firms as an article assistant. So have you seen when any entity which has purchased computer and laptop, they are capitalizing the operating system separately from the computer and laptop? I have never seen in my life, honestly speaking. Let's forget about Ind AS 38. Let's talk practically. But in my 17 years of post-qualification experience and my 3 years of articleship experience, so in my 20 years of experience, I have never seen that a company which is acquiring a computer and laptop is capitalizing the operating software separately. Means computer and laptop without operating system and operating system. I have never seen in my life. So friends, the standard says that, and you can see that these accounting standards are such a meticulous standards, right? So they have also covered this aspect. And the accounting standard says that, the Ind AS 38 says that if there is a combination of tangible asset and intangible asset, right? When there is a combination of tangible asset and intangible asset, means the tangible asset and intangible asset are combined, right? And it is reflecting as a one asset. In that case, whatever is a significant component, the significant component has to be capitalized, right? Like in this computer software, in this computer laptop or a software, the significant part is a physical part, which is your computer and laptop. Okay. So in this case, computer and laptop will be capitalized. Computer and laptop will be capitalized as a PPE. Operating software is not required to be capitalized separately. It is a part of the computer and laptop itself. Standard says that why this software, while this software is an intangible asset, but why this software has not been recognized separately? Standard says that if the computer is integral part of the hardware, if the software is an integral part of the hardware, then it will not be capitalized separately. Okay. It will not be capitalized separately. Sir, what does it mean? So can the operating system run without this software? Can the operating system run without this hardware, without this computer or laptop? Answer is no. So whenever you have purchased your computer or laptop, and when it comes with the operating system, have you transferred the operating system from this machine to any other machine? Answer is no, never. Correct? So if the operating system or if the software is the integral part of the hardware, integral part of the machine, in that case, that software is not required to be capitalized separately, right? And between the tangible and intangible, whatever is capitalized, the significant component is going to be capitalized as per the nature of that asset. Okay. Like in this case, the computer needs to be capitalized. Okay. So if the software is integral part of the hardware, then it will not be capitalized separately. Now I'm giving you another example. Have you guys used any tax return software or TDS software?
Computex Genius.
Computex Genius. Okay. So basically, you went to buy a TDS software. Okay. And you told that I need a TDS software. The vendor or the shopkeeper has given you the TDS software in the pen drive. Okay. So earlier it was a floppy disk or CD, or now it is a pen drive or a CD. So this software is like a plug and play. Okay. For example, Nisha has purchased that software and Nisha has to file the TDS return. So she has inserted that pen drive in her laptop and she started using that software for the purpose of filing TDS return. Then I asked her that please give me that TDS software. Please give me the TDS software. She has given me the pen drive. I have just put the pen drive in my laptop. So it is just like a plug and play. So I started using that pen drive. I started using that software for filing the TDS returns. Now tell me whether this software is an integral part of the hardware. Whether this software is an integral part of the hardware. Answer is no. Answer is no. Tally software, TDS software. So friends, if software is not the integral part of the hardware, means this software cannot run without that machine, or that machine does not have any use without that software, right? If it is like that, then it is not required to be capitalized separately. But if the software is not an integral part of the hardware, in that case, it has to be capitalized separately. For example, Tally software. Have you guys seen that Tally software has to be capitalized separately? Have you guys have seen that Tally software has been capitalized separately? Yes, I have seen. SAP, ERP, Tele software, some other software the company has acquired. Okay. So friends, if the intangible asset is integrated in a physical asset, right? And which is an integral part of that physical asset, in that case, it is not required to be capitalized separately. Okay. Second example. So what is the answer in this case? What is the answer? In this case, whether entire computer and laptop will be classified as PP or IA, intangible asset, or it should be splitted between intangible asset and PPE. So entire computer and laptop is capitalized as a PPE. Second, robot. Have you seen any robot? Have you seen any robot? What is Alexa? What is Alexa? What is Alexa? Do you have Alexa? Alexa है आप लोगों के घर में? किसी के घर में Alexa है? Yes, many of you would have Alexa. So Alexa is just like a device. You can go and buy Alexa. I think the cost is 2,000 or 3,000 rupees for Alexa. If you ask Alexa, Alexa, what is the time now? Alexa will say that the time is 9:25 a.m. now. If you will ask Alexa, how's the weather today? Alexa will say that the weather is little cloudy and you can expect some rain today after 2 hours. Then you ask Alexa, please play songs. Then Alexa will start playing songs. Hangama.com or musically.com, right? So whether Alexa is a tangible asset or it is an intangible asset. Alexa is the robot. Now the question is whether it is a tangible asset or an intangible asset. You can see Alexa, you can hold Alexa, you can touch Alexa. Whether it is an intangible asset or tangible asset. Abrakes is saying it's an intangible asset. Vignesh is saying tangible. Karthik and Karthik is saying intangible. Monica is saying tangible. Ginny is saying intangible asset. What about the other students? So Khushi is saying intangible assets. And Hemant is saying, yes, sir, it is an AI software. It is an artificial intelligence software. So most of the many students have told that it is an intangible asset. Friends, if you see the robot, right? So what is the significant component in the robot? What is the significant component in the robot? Is it the knowledge which is embodied in the robot, or is it a substance of the robot? Even you have seen the robot is just like a human being. The robot has a human skeleton. Human skeleton means the robot has a structure like a human. The robot can run, the robot can talk, the robot can walk, right? The robot can walk. So you can see robot like a human being. But what is important in that robot? What is expensive in that robot? Whether the knowledge embodied in the robot, whether the software embodied in the robot, or the physical part of the robot, means that skeleton or Alexa device, right? The speaker. So what is significant? How Alexa is answering your old question. If you will say good morning, Alexa, Alexa will revert you good morning, right? Good morning. If you will say something in your regional language, like I'm also Marwadi. So once I spoke in Marwadi with Alexa, then Alexa reverted me back that I don't understand this language. Can you please speak in English or Hindi? because I have done the settings in English or Hindi for Alexa. So how Alexa is answering all the questions? When I'm asking Alexa, who is the Prime Minister of India? Alexa is saying, Mr. Narendra Modi. So whatever a question I'm asking, Alexa is responding to that. So what is the substance? What is behind Alexa? Is that model, that device, or it is that software, or it is that artificial intelligence AI which has built Alexa? So what is the significant component, friends? What is the significant component? Software. Software is the significant component, right? So, and hence Alexa or this robot, it is not a PP, it is an intangible asset. So whether robot is a PP or intangible asset, so robot is capitalized as an intangible asset. Robot is capitalized as an intangible asset. Have you understood? So robot is capitalized as an intangible assets, my dear friends. Okay. Third, question number third. License given by way of a contract. License given by way of a contract. C. Telecom company has got a license. Telecom company has got a 5G license from Government of India, India, by way of a contract, Is it a PP or intangible asset? Is it a PP or intangible asset? You have the license, you have the copy of the license, you have the paper, and you have framed that paper, and this company has, put that frame on the wall. Let's see, we have the 5G license, which has costed us 40,000 crores, 30,000 crores. And we have this license valid till next 15 years, next 20 years. Is it a tangible asset or it is an intangible asset? Karthik, my question is pretty simple. Is it tangible or it is intangible? It is. Why? I can see the piece of paper where this license was awarded in my favor. Whether that paper is significant or the rights which have been given to this company for 15 years are significant. The rights are significant. Not this paper is significant. The cost of this paper is not 40,000 crores. The cost of the rights given to that company for 15 years is 40,000 crores. आपको पता है ना, स्पेक्ट्रम लाइसेंसेस बहुत महंगे बिकते हैं. आपने न्यूज में सुना होगा ना, द गवर्नमेंट हैज sold or government has allotted the 5G license to the telecom companies, and government has collected 1 lakh crore, right? 1 lakh crore, not a small number. So there are 12 zero after 1. There are 12 zero after 1. So you all are right. This telecom license, this license is an intangible asset. License is capitalized as an intangible asset. License is capitalized as an intangible asset. Okay. So we understood the meaning of without physical substance. We understood when there is a combination of tangible and intangible asset, you have to see if it is a hardware and software, you have to see if that software is the integral part of the hardware, then this software is not required to be capitalized separately. And you need to see what is the significant component, right? So whatever is the significant component, that significant component will be the asset, like tangible or intangible. Thus, the first example I have given you computer and laptop, then the reverse example I have given you robot, so that you will be understand that what is significant, right? Then the third example I've given you license. Okay. Right. Now, friends, after without physical substance, let me discuss non-monetary asset. Let me discuss non-monetary asset. Okay. Let me discuss non-monetary asset. Pooja is asking, sir, is it the first lecture of Ind AS 38? Yes, Pooja, this is the first lecture of Ind AS 38. Non-monetary asset. What is meant by non-monetary asset? Non-monetary asset are those assets which are not monetary. Correct? What is meant by not monetary? What is meant by not monetary? Okay. So non-monetary asset are those assets which are not a monetary asset. Which are not a monetary asset. Okay. Non-monetary asset, non-monetary asset are those assets which are not a monetary asset, which are not a monetary asset. So which definition is important to understand? Which definition is important to understand? Monetary asset. If you know the definition of monetary asset, right? And if that item is not a monetary asset, then it is a non-monetary asset. Okay. So what is meant by monetary asset? What is meant by monetary asset? What is meant by monetary asset? Monetary asset are those assets which is settled into a cash, which is settled in cash into a fixed unit of money, into a fixed unit of money. For example, the company has given a loan of 5 lakh rupees. The company has given a loan of 5 lakh rupees. So how much fixed unit of money? How much fixed unit of money means fixed unit of rupees the company has a right to receive? 5 lakh rupees. 5 lakh rupees. The company has sold a goods worth rupees 1 lakh on credit to a US resident. The company has sold, or the company has exported goods worth rupees 1 lakh on credit. Doesn't matter. Whatever is the rate of USD versus INR, how much dollar the company will receive? How much dollar the company will receive? The company will receive how much dollar, guys? 1 lakh US dollar. 1 lakh. So it means this is a trade receivable. If the company is selling goods on credit, then the other party will become your debtor, will become your trade receivable. It is an asset, right? So this is an asset which is settled in cash into a fixed unit of money. In cash into a fixed unit of money. For example, trade receivable. Okay. But whether PP, property, plant and equipment, is a monetary asset, do you have a right? Can you say that this asset is going to be settled into a fixed unit of money, into a fixed unit of currency? You are using the asset into your business and hence it is a PP. You have not sold the goods. You don't have a right to receive cash against the PP. Correct. And hence PP is not a monetary asset. PP is not a monetary asset. Okay. Inventory. Whether inventory is a monetary asset. Whether inventory has a monetary asset. Ginny, do you have a right to receive fixed unit of cash against inventory? How do you know? You haven't sold the inventory yet. So inventory is in your godown. Let's say if the fire will break out in the godown, it will destroy the entire inventory. How can you say that I will receive 100 rupees or $100 by selling that inventory? That inventory has a value. I agree that inventory has a value. Okay. That PP also has a value. अगर वैल्यू नहीं होगी तो बुक्स ऑफ अकाउंट्स में रिकॉर्ड कैसे करोगे? But the question is whether it is a monetary asset or whether it is a non-monetary asset. Correct? Is it a monetary asset or a non-monetary asset? What is a monetary asset? the asset which has to be settled in cash, the asset which gives you right to receive cash into a fixed unit of currency, assets which give you right to receive cash into a fixed unit of currency. Correct? So until and unless the inventory is sold, when you sold inventory, it will be converted into the trade receivable, right? So trade receivable is a monetary asset, but inventory is a non-monetary asset. Correct? Intangible asset is a non-monetary asset. Biological asset is a non-monetary asset. So what is my monetary asset? What is my monetary asset? Asset which gives a right to receive cash, into a fixed unit of currency, like trade receivables, loans, cash, okay, bank balance. These are the monetary asset. Non-monetary asset, we understood non-monetary asset. Non-monetary asset are asset which are not a monetary asset. For example, PPE, investment property. Okay. Then biological assets, inventory. Okay. So these are the non-monetary asset. I believe you guys are clear on the non-monetary asset. Are you clear on the non-monetary asset or not? Tell me. Are you clear? Not clear? Are you clear on the non-monetary asset? Yes?
Sir, the bifurcation as to monetary and non-monetary asset, does it equal to or same as financial or non-financial asset?
Does it?
Equal to financial or non-financial asset bifurcation?
Yes, you can say that.
Okay, sir.
Largely same. Yes, you're right, Pooja. So normally, Pooja, when you can say that, I will settle this asset, or I will settle this obligation, or I will get this cash, the fixed unit of cash from this asset, you will only when it will be a financial asset, right? जैसे ट्रेड रिसीवेबल है वो फाइनेंशियल एसेट है, लोन एसेट इज अ फाइनेंशियल एसेट, कैश इज अ फाइनेंशियल एसेट, बैंक बैलेंस इज अ फाइनेंशियल एसेट, फिक्स्ड डिपॉजिट इज अ फाइनेंशियल एसेट, राइट? अगर राइट टू रिसीव कैश नहीं होगा तो पता कैसे होगा कितना पैसा आना है? करेक्ट? सो नाउ लेट्स
बट जब हम लाइसेंस डिस्ट्रीब्यूशन करते हैं तब फिक्स्ड अमाउंट ऑफ रुपीज एंड फिक्स्ड अमाउंट ऑफ यूनिट जाती है, देन मॉनेटरी टर्म्स में ही हम लोग उसको काउंट करते हैं.
So Monica, here we are talking about the asset, right? Whatever you are talking about payments. Okay. So whether your asset is a monetary asset or a non-monetary asset, monetary asset are those assets which will give you a right to receive cash, fixed unit of cash. You have a lot of assets in your balance sheet. You have a PPE, you have an investment property, you have an intangible asset, you have a biological asset, you have a cash balance, you have a bank balance, you have a trade receivable, you have a prepaid expenses. You have a lot of assets in your balance sheet. Now tell me, you have an inventory. Okay. Now tell me, so by putting the hand on your heart, can you say that, yes, sir, I have a right to receive $5 lakh on this PP? But can you say that this PP has not been sold out? This PP is held for using in your business for the long-term purposes, and hence this PP is a non-current asset, right? But
Okay, sir.
but if you have sold the goods, then what is the nature of the asset? आपने अगर goods credit पे बेचे हैं तो asset क्या बना? Inventory has been shifted from the goods have been shifted from inventory to
credit field.
to trade receivable,
Right. Huh.
debtors, right?
Hmm.
So whenever you have sold the goods, what right you are getting? You are getting a right to receive money.
Yes. Huh.
Yes.
Yes,
But
sir.
whenever inventory is lying in your godown, whenever inventory is lying in your godown, have you got any right to receive cash from anyone until and
No,
unless some event is occurred?
no,
नहीं है
sir.
ना? नहीं है ना?
No, sir.
I have lot of knowledge embodied in my heart, in my mind, but until and unless I will not teach FR to students, right? How can I get the money?
Okay, sir.
So inventory तो मेरे अंदर है, लेकिन
Yes, sir.
जब तक मैं डिलीवर नहीं करूंगा मेरे को राइट नहीं मिलेगा, स्टूडेंट मेरे को पैसा नहीं देंगे. करेक्ट?
Absolutely okay, sir.
So
Correct.
always remember the difference between inventory and trade receivable. It will give you enough clarity. Inventory is non-monetary, trade receivable is a monetary asset, right? And the only difference is right to receive is the only difference. Inventory does not give you right to receive. Trade receivable gives you right to receive a fixed unit of cash, fixed unit of currency. Okay.
Okay.
Yes. Now let's move on. Let's talk about the first leg, which I'm covering in the last. Identifiable. Non-monetary asset, quite simple, but I've given you 3 instances, right? Then without physical substance was quite clear, but I've given you 3 instances. Then I've covered non-monetary asset. Now I am covering identifiable. Collectively, when you add all these 3 items, it will become your intangible asset. Sir, what is meant by identifiable? You guys need to tell me what is meant by identifiable. Whatever knowledge you are having, tell me what is meant by identifiable. Anyone who wants to volunteer?
Whether that thing can be separated from the asset.
Okay, very good. So you're talking about some separation. Okay. Nisha is talking about some distinct existence. Okay. Abracase is saying can be pinpointed. Okay. Anyone else? So let me look at the other than Zoom platform. So Hemant is saying distinct. Okay. Having separate entity, having separate existence. Right. Okay. Yes. So identifiable. What is meant by identifiable? Identifiable means either separable or arises from contractual or other legal rights. Okay. An asset is considered as identifiable. An asset is considered as identifiable when either it is separable or arises from contractual or other legal rights. Okay. So let me write first, then I'll explain. An asset is considered as identifiable when an asset is considered as identifiable when it is separable, when it is separable, when it is separable or it is not and, it is or, when it is separable or arises from contractual or legal rights. Contractual or legal rights. Arises from contractual or other legal rights. Okay. What is meant by separable? Separable means capable of being sold, rented, licensed, exchanged separately from the entire business or entity. Capable of being sold. Separable means capable capable of being sold, capable of being sold, rented, licensed, exchanged, exchanged, exchanged. Capable of being sold, rented, licensed, exchanged separately from the entire business or entity. Let me explain you with the help of an example. Let's say a company, there is a company which is into the business of selling garments. Okay. And you guys must have seen, if you are living in a tier 2 or tier 3 cities, you must have seen some prominent shops. Prominent shops means, for example, there is a textile shop or there is a garment shop which has a huge brand name, which has a huge name, right? So you can see that in the market there are 5 shops, but there was always one shop where a lot of crowd will be there. The other shops, there may not be any customer, or there may be 1 or 2 customer, but in one shop there must be waiting. Have you seen such shops of either grocery or either garments or either some furniture or some other items? You must have seen some shops like that. कभी देखा आपने मार्केट में कोई ऐसी दुकान तो देखी होगी ना, जहां पर एक दुकान में बहुत भीड़ होगी बट बाकी लोगों के पास इतनी भीड़ नहीं होगी, राइट? सो फ्रेंड्स, for example, there is a shop, right? There is a company which has a legacy of 50 years, 50 saal, which has a legacy of 50 years. And due to the legacy of 50 years, this company has captured a market share of 70%. The company has captured the market share of 70%. Like if I talk about Pidilite, what is the product of Pidilite? Pidilite Industries? Fevicol, Feviquick, Fevicol. So normally it says that the Pidilite has a market share of close to 80-90%, right? 80-90%. Now my question to all of you is, due to this market share of 80-90%, whether this company is getting benefit? Benefit to hai na, future economic benefit to hai. The company is generating a lot of money, right? Because the company is a market leader. They are getting money itself. Okay. But the question is, this market share is a non-monetary asset. Answer is yes. This market share is a non-monetary asset. Because there is no right to receive cash. You cannot say that from market share, I have a right to receive 100 crores in 2 years. The answer is no. From market share, of course, it is not having a physical existence. It is a non-physical asset. It does not have a physical substance. It is a non-monetary asset. But whether market share is identifiable, can Pidilite Industries, can that company or that shop which has a legacy of 50 years, can this shop or Pidilite Industries can capitalize a market share in its books of accounts? While market share can be fair valued. Market share की fair value निकाली जा सकती है, right? Because of some, so you can apply some projections, you can apply some formula, you can get the fair value of the market share. But the question is whether market share is identifiable. Sir, how can we say that market share is identifiable? You need to ask 2 questions. Question number 1, whether market share is separable or market share arises from contractual or legal rights. Whether market share is arising from contractual or legal right, answer is no. किसी ने market share दिया थोड़ी है, ये तो कंपनी की क्रेडिबिलिटी की वजह से आया है, कंपनी के अच्छे प्रोडक्ट की वजह से आया है, कोई कॉम्पिटिटर नहीं है मार्केट में इसलिए आया है. Is it governed by some contractual or legal right? Answer is no. Then ask the first question, whether market share is separable. What is meant by separable? Can this entity, without selling the company, can this entity is able to sell the market share? For example, Pooja and Monica is my customer. I am selling FR. I am selling FR subject. And Pooja and Monica is my student, are my student. There is some other faculty also, right? Due to my credibility, students are coming to me. Okay. I have captured a market share of, let's say, 70%, hypothetically, right? There is some other faculty also in the market. Can I sell this market share to other faculty? Can I say to other faculty that give me 50 lakh rupees and I am selling my market share to you, so the customer will go to you? Can I control customer? Am I controlling Pooja and Monica? So can I influence the decision of Pooja and Monica? Have I entered into a contract with them that you should teach, you should take a coaching of FR from that faculty because I have sold my market share? Answer is no. Market share is not separable. Why? Because it is not capable of being sold, rented, licensed, exchanged separately from the entire business or entity. Correct? For example, I'm teaching in one institute, right? And students are coming to me just because of taking a coaching from me. Some other company has acquired that institute. Some other company has acquired that institute. Earlier, the institute belongs to me. I had a market share. But when I have sold this institute, I'm teaching there. I have sold that institute to some other company. Now that company has got this market share. But how this company can get the market share? Because this company has acquired the entire business, right? I cannot say that I can only sell market share, I can only sell goodwill, right? So this cannot be separated from the business. Have you understood that this cannot be separated from the business? Okay. Is that clear? Is that clear? So market share cannot be recognized as an intangible asset because it is neither arises from contractual legal rights, nor it is separable. Okay. Nor it is separable. Friends, second example. The government of India has given a license, a telecom license, for example, a telecom license to a company or an entity, right? And government of India has told you cannot sell this license, you cannot rent this license, okay? You cannot exchange this license in exchange of another asset. So government of India has given a telecom license to a telecom company and told that telecom company you cannot sold, you cannot rent out, you cannot license, you cannot exchange this license to others. Whether this license is separable. Whether this license is separable. Friends, whether this license is separable or not separable. This license is not separable. Nisha, government of India has told, na, you cannot sold, you cannot rent out, you cannot license, you cannot exchange this license. So the first condition for separability is it is capable of being sold, rented, licensed, exchanged separately from the business. It cannot be sold separately. So can I say that this license is identifiable? Can I say this license is identifiable? Can I say this license is an intangible asset? Mamta is saying no. Why, Mamta? Why you are not checking the other condition? An asset is considered as identifiable when it is separable or when it is separable, it is not separable. Okay, then check another condition, or it is arises from contractual or legal rights. So don't you think when I'm paying a consideration to Government of India and Government of India is awarding me a license, don't you think I'm getting a contractual or legal right? I'm getting a contractual or legal right to operate in some telecom circles in some state. Yeah. So it is arising from contractual or legal right, and hence it is an intangible asset, and hence it is an intangible asset, right? So friends, either it is separable or arises from contractual or legal right. While it is not separable because it cannot be sold separately, it cannot be rented separately, right? It can be sold. If someone will acquire this company, that entity will automatically got this license, right? Through the entity, means through the business, not separately, correct? So either it has to be separable or it should be arises from contractual or legal right, okay? For example, Reliance Communication have purchased a telecom license from Government of India. It is recognized as an intangible asset because it is identifiable. Correct? Is that clear? For example, a company has got a broadcasting license, PVR. PVR has got a broadcasting license for movie Stree 2. Have you watched Stree 2 movie? Shraddha Kapoor and Rajkumar Rao. Have you watched that movie? Stree 2? Right? In the theaters? Yes. So normally what happened, these theaters like Inox, PVR, okay? So these theaters got a broadcasting license, okay, for the movies. So if, let's say, Dharma Productions has given a broadcasting license to PVR that you have to, you can broadcast this Stree 2 movie on your screens, right? And you cannot provide this broadcasting license, this reel, to any other theaters like Wave Cinemas or Inox, right? In that case, while that broadcasting rights are not separable, but it is arising from contractual or legal rights, and hence it is considered as an identifiable. Okay. Okay. So friends, we have covered the three legs: without physical substance, non-monetary asset, and identifiability. So we have covered all these three instances, all these three legs, right? Now let's go to the PowerPoint presentation again. And we have covered identifiability, we have covered without physical substance, we have covered non-monetary asset. So what is my intangible asset? It is a identifiable non-monetary asset without having physical substance. Okay. Let's discuss illustration number 1. Sun Limited has an expertise in the consulting business. In years gone by, the company gained a 30% market share for its services business and intends to recognize it as an intangible asset. Evaluate whether the action taken by the company is justified. Tell me. Ginny, is it justified? If no, then why no? Ginny, why market share cannot be capitalized as an intangible asset? It is a non-monetary asset. It is without physical substance, right? Then why it should not be capitalized as an intangible asset? It is giving a benefit to the company also. The future economic benefit is also there. But why it should not be capitalized as an intangible asset? Yes, it is not identifiable. Why it is not identifiable? Because it is not arising from contractual or legal rights, as well as it is not separable. It is not separable. Okay. It is not separable. Clear? Is that clear? Is that clear? Yes, Prachi, you can unmute yourself and ask the question.
Good morning, sir.
Good morning, Prachi.
Yes, sir. Sir, what if the company is engaged in the manufacturing of two products, and after some period of time, the company gives the market share, the company has a good market share, and the company sell this market share to the another person. So it can happen that the other company which is acquiring that market share, so it will be the
Prachi, normally what happened, there is a element of control which is inbuilt in these kind of arrangements, right? So what is a market share? Market share is a bunch of customer, correct? So market share means when you are saying that I have captured, let's say an airline company says that I have captured 80% market share. What does it mean? It means out of 10 crore passenger, 8 crore passenger belongs to that company. Okay. Or I would say that if there is a business of, let's say, 1000 crore, 800 crore goes to that company. Correct? Tell me, can a company only sell the market share? Means, can the company control the customer? It is the wish of the customer whether customer will go to X company or customer will go to Y company. Okay. Let's take an example of Pidilite. Pidilite is a company which is manufacturing Fevicol, right? So what will happen? Let's say today Pidilite has a market share of close to 80-90%. Okay. So how Pidilite will sell the market share? So probably someone who is buying the market share he will able to buy the market share without Pidilite. I mean to say, if I have to get the market share of Fevicol, I will acquire not the market share. I will acquire Pidilite. Okay. The entire company. When I will acquire Pidilite, for example, Pidilite belongs to X group. Okay. Now Mukesh Ambani wants to buy this Fevicol market share. So he will acquire Pidilite. He will acquire Pidilite. He will invest. He will buy the shares of Pidilite, and then he will control Pidilite. Okay. Then entire market share. Why he will acquire Pidilite? Because he know that Pidilite has a market share of 80-90% in India in terms of its product. Right. So he has seen the future economic benefit, and that is why he is paying some premium. So he is acquiring Pidilite not because of Pidilite, but because of Fevicol, because of the market share. He is acquiring market share, but not separately. He is acquiring market share with the business. Business के साथ ही खरीद रहा है, अलग से market share नहीं बिकता. Correct? Because Pidilite cannot say that कि मैंने मुकेश अंबानी से 10,000 करोड़ रुपए लिए हैं तो मैं अपने सारे कस्टमर मुकेश अंबानी के पास भेजूंगा. It is at the discretion of the customer. So Prachi, it is at your discretion whether you will use that product or you will not use that product. There is no any contractual arrangement. There is no any contractual arrangement. Neither one can sell the market share separately, right? So market share कभी भी अलग से नहीं बिकता. Market share या तो पूरी कंपनी के साथ ही जाता है या क्या होता है. For example, in your case, there are two products. One product has a market share of 80%. So the other company will pay this company to kill the competition. The other company will give this company 10,000 crore and the other company will say that don't sell your product. Stop selling your product. Okay. So क्या हुआ? To kill the competition, इस कंपनी ने इस कंपनी को पैसे दे दिए कि तुम माल बेचना बंद कर दो. So in this case, the business has been stopped. Right? In other case, the business was acquired. But in both the cases, market share is not selling separately. Correct? And it is not arising by any legal rights. Is that clear?
Yes, sir. Thank you, sir. Thank you.
So non-compete fee, like in case of a franchisee business. Okay. When you are taking a franchisee of any company, like Ashirwad Atta from ITC, these companies have some distributors, right? And every distributor has some area allocated. For example, if I am a distributor of ITC will tell me that, Mr. Alok, your area is 5 kilometers in Gurgaon. So you have to sell your product in these sectors, right? For other sector, they have given the distributors, they have given the franchisee to the other distributors. So it is arising from the contractual or legal rights. So these franchises are arising out of contractual or legal rights. Okay. It is not like a market share that you have to capture the market share in these sectors. Right. So it is out of the non-competing arrangement or franchising arrangement. Right. Okay. Yes, Ginny, you have some question?
Sir, then this market share we can consider as a goodwill or not?
In case when the company is acquiring?
Yes, sir.
So when you read business combination Ind AS 103, it says that normally what happens, and even one of the question we will do in this standard itself, it says that if an acquirer is paying some consideration, for example, an acquirer is acquiring a business and acquirer is paying 100 crores to acquire that business. That business has a tangible and intangible assets of, let's say, 80 crores. So why that acquirer will pay 20 crore extra? If the fair value of the asset acquired is only 80 crore and acquirer is paying 100 crores, why he is paying 20 crore extra? Because of some inherent benefits,
Yes, sir.
because of some future economic benefit this acquirer is foreseeing due to some market share, due
Yes,
to
sir.
some large list of customers, large list of contracts, right? Okay.
Yes,
So in accounting standard days, we call it out as a goodwill. Everything is goodwill. So total consideration paid minus the fair value of the asset acquired. The difference is there. It is goodwill.
goodwill. Yes, sir.
In Ind AS, standard says that whenever your purchase consideration is more than the fair value of the asset, you need to identify why the company is paying it extra, why the acquirer is paying it extra. If it is due to some inherent intangible assets, in that case, those intangible assets needs to be capitalized. For example, brand name. For example, customer contracts. Okay.
Yes, sir.
So those intangible asset has to be capitalized separately. Why? Because you are paying for that. आप 20 crore extra क्यों दे रहे हो? You are paying for that, right? It is not a self-generated intangible asset. You are paying for that. So you have to identify, is there any intangible benefits, any intangible asset for which we are paying? If answer is yes, capitalize that. For example, market share. So you are paying for that. So you can capitalize that market share in case when you're acquiring that, right? I am talking about the self-generated intangible asset, which is a market share, right? Due to my legacy, due to my product, due to my credibility, I have captured a market share of 80%. Can I capitalize this self-generated market share as an intangible asset? Answer is no. Why? Because I cannot sold it separately. I cannot let out separately. I cannot exchange it separately without selling my entire business. Right?
Yes,
Is
sir.
that clear?
Yes, sir.
So
Clear.
I will also solve one question on this when I will discuss mode of intangible asset acquisitions.
Okay, sir. Thank you, sir.
Okay. Yes. Another question. Illustration number 3, identifiability of intangible asset. Pluto Limited intends to open a new retail store in a new location in the next few weeks. Pluto Limited has spent a substantial sum on a series of television advertisements to promote this new store. This company has opened a new retail store and this company has spent a huge amount of money in advertisement. Right? The company has paid an amount of rupees 8 lakh for advertisement before 31st March 2001. 7 lakh of this sum relates to advertisement shown before 31st March 2001 and 1 lakh to advertisement shown in April 2001. Since 31st March 2001, the company has paid for further advertisement costing rupees 4 lakh. Okay. Pluto Limited is of the view that such cost can be carried forward as an intangible asset since market research indicates that new store is likely to be highly successful. Okay. So what it is written, the company has paid an amount of 8 lakh for advertisement before 31st March 2001. So company has paid an amount of 8 lakh. The company has already paid 8 lakh rupees for before 31st March 2001. 7 lakh belongs to advertisement shown before 31st March 2001 and 1 lakh to advertisement shown in 1st April 2001. Since 31st March 2001, the company has paid for further advertisement costing rupees 4 lakh in addition to 8 lakh. Pluto Limited is of the view that such cost can be carried forward as an intangible asset since market research indicate that this new store is likely to be highly successful. Analyze the treatment of above cost in the financial statement for the year ended 31st March 2001. Tell me whether we need to expense off or whether we need to capitalize this as an intangible asset. Whether this
It has to be
advertisement,
it has to be treated as advertisement expenditure.
okay, why it cannot be capitalized as an intangible asset? Since you are making an advertisement, you have paid for the advertisement. You will receive future economic benefit, right? Probably you will receive the future economic benefit because of the advertisement. People will know about your product. People may come to your
Sir,
to the
as you mentioned, it is probably, sir, there is no obligation for the customer that they have to come and buy with you or that retail shop.
so this
There is no
advertisement.
contract.
So are you talking about Nisha? Are you talking that it is not identifiable?
Yes, sir.
Okay, okay. This is what I was expecting. Okay. So basically, it is a non-monetary item. Yes, it is a non-monetary means you don't have a right that yes, since I have done the advertisement, I will receive at least 10 lakh rupees. So answer is no. So it is a non-monetary asset, not a monetary asset. It is a non-monetary item, not an asset. Second, it does not have a physical substance. You cannot see the benefits of the advertisement, right? So third, so it is meeting the 2 lakhs. It is a non-monetary item without physical substance, but it is not identifiable. Why? There is no legal or contractual right that since you are giving an advertisement for rupees 8 lakh, we are guaranteeing that minimum you will be able to sell the product a minimum for 10 lakh rupees, right? There is no legal or contractual rights. नहीं होता ना advertisement में कोई legal or contractual rights. Have you seen the coaching centers are selling a lot of pamphlets? Have you seen that? वो pamphlet जगह जगह पे वो pamphlet distribute करते हैं, right? Or some news store has circulating some pamphlets. So it does not mean that the customer will go to that stores, right? So it is not governed by the legal or contractual right, and even it is not separable. The company will not say that, see, I have done some advertisement for 8 lakh rupees. I am selling that right to you. So since I have done the advertisement, the customer will come to you. It is not separable, right? And hence the company cannot show this as an intangible asset. The company cannot capitalize this as an intangible asset. Under Ind AS 38, intangible asset can only be recognized if they are identifiable and have a cost which can be reliably measured. Cost to rahegi hamesha. These criteria are very difficult to satisfy for internally developed intangible. For these reasons, Ind AS specifically prohibit recognizing advertising expenditure as an intangible asset. The issue of how successful the store is likely to be does not affect this prohibition. Therefore, such cost should be recognized as an expense, even though it is not identifiable. However, this cost would be recognized on an accrual basis. Therefore, of the advertisement paid before 31st March, 7 lakh would be recognized as an expense and 1 lakh will be recognized as a prepaid expenses. Okay. The 4 lakh cost of advertisement since 31st March 2001 would be charged as expense in the year ended 31st March 2002. Right? Any question? Any problem? Any question? You are right, Khushi. We need to expense off because it does not provide any right. Correct. So these advertisement expenses are always going to be expensed off in the P&L. Always going to be expensed off in the P&L. Right? Friends, so if I talk about the recognition of intangible asset, you remember in the initial few minutes, I talked about that it has to meet the definition of an asset. It has to meet the control criteria, right? You remember I told you asset is a resource controlled by the entity. So we understood the definition of intangible asset. It has to be a non-monetary asset. It has to be identifiable non-monetary asset without physical substance. And it also meets the criteria of control. It also meets the criteria of control that intangible assets should have a control criteria also. Sir, what is the control criteria? We will discuss after the break. It's 8:35 now. So let's have a break and we will start at 8:45. Okay. We'll start at 8:45. 10 minutes break. intangible assets by nature, there is an important criteria of control, right? A control should be established if you are capitalizing the intangible asset. Intangible asset, while the issue of control may not be there just due to possession. Okay. For example, flat. And you guys must have seen in many buildings, in many societies, in Gurgaon, if I'll talk about, in Gurgaon, there are so many high-rise societies where occupancy certificate has not been received and hence registry has not been done. Means the builder has not transferred the flat in the name of the buyers. Why? Because occupancy certificate from the registrar of properties or from the government has not been received, and hence the ownership has not been transferred. But people started living in those societies. Like in my society in which I am living, the occupancy certificate is not there, the registry is not there, but we are living in this society, right? Because we have a possession of the flat. So how we are controlling? We have a control over the asset by way of possession, because it's a tangible asset. It's a tangible asset. Okay. But for intangible asset, right? For intangible asset, the control criteria is important. Intangible asset, it is not very difficult, but in intangible asset, it has to be there. Okay. So an entity controls an asset if the entity has power. So this control will be established if the entity has a power to obtain the future economic benefits. To obtain the future economic benefits. For example, Dharma Productions has given a broadcasting license of a movie or a broadcasting license of IPL matches, right? If a BCCI has given a broadcasting license to IPL matches to, let's say, Jio, okay? In that case, Jio has a power to obtain the future economic benefit by telecasting these IPL matches. The subscriber will subscribe, the subscriber will watch on Jio TV, right? To obtain the future economic benefit. This company has a power to obtain the future economic benefit. PVR has a power to obtain the future economic benefit. Why? Because only PVR can broadcast this movie, other cannot broadcast this movie. So by way of getting this license, PVR got a right. Second, restrict the access to future economic benefit of others. Restrict the access or to future economic benefit of others. It can restrict the access to others also. Let's say I've written a book on Ind AS, okay, and on that book, I have a copyright on that book. I have a copyright of the content of that book, okay. So restrict the access to future economic benefit of others, right? I have a copyright of that book. So friends, due to the copyright, if anyone will copy the content, because I have written on the first page, copyright is with the authors, it is with the Alok Garg. And if anyone wants to copy this content, if anyone wants to alter, modify, copy this content, right, he will be punished, or a suit can be filed for the infringement of this, or for the copying of the content, right? Why? Because of this copyright which is there with me. Okay. So due to that copyright, I'm restricting the access to future economic benefit of others, right? If I would not have been the copyright, if anyone would be copy that content, I cannot claim in the court of law, right? So friends, by having a trademark, by having a copyright, by having a patent, I can restrict the access to future economic benefit of others. Sir, हम उसको कैसे रोकेंगे? For example, you are living in North India, you have written a book, and someone in South India, Eastern India, Central India, or Western India, someone has copied your content. How will you be able to know about that? So it's not about that someone who is stealing. It's not about how I can stop him. The point is, if I would be able to know, I can stop him just because I have a copyright, right? If I would not have been the copyright, मैं पता लगने के बाद भी नहीं कर सकता था, right? But since I have a copyright, I can stop him. Okay. So friends, intangible asset, in case of intangible asset, so normally it says that an entity control the asset if the entity has a power. So control comes from the power. And what is the power? power to obtain the future economic benefit from that asset, or power to stop other from accessing the future economic benefit, or it is arising from legal rights. Generally, when you are acquiring intangible assets, generally it is out of legal or contractual right, and there is a power and there is a control. It is said that there is a power and there is a control, right? In absence of legal right to protect, an entity usually has insufficient control over the expected future economic benefit. You must have heard now in YouTube, when on YouTube, when you want to play some songs, the songs will not be played because it is written that the copyright is not with YouTube. The copyright is with the musician or that singer. Okay. Or at the bottom of the video, it is written that the copyright is with so and so. It cannot be reproduced. It cannot be produced, reproduced, altered, modified in any manner, right? So these things are written on those songs, right? So what does it mean? It means it is restricting the access. So this copyright is giving a power to restrict the access to future economic benefit of others. So in absence of legal right, an entity usually has insufficient control over the expected future economic benefit. For example, a company has spent a huge amount of money. Company XYZ has provided training to its staff on various new topics like GST, IFRS, Ind AS, etc. to ensure the compliance as per the required law. And the company has spent a huge amount of money on the training. Can the company recognize such cost of staff training as an intangible asset? The company will receive the future economic benefit. So can the company has a control over such benefits? Can the company recognize? Answer is no. Why? It is clear that company will obtain the future economic benefit from the work performed by the staff as it increases their efficiency, but it does not have any control over them because the staff could choose to resign the company at any point of time, right? Hence, the company lacks the ability to restrict the access of others from these benefits. Therefore, the staff training cost does not meet the definition of intangible asset, right? So it does not meet the definition of intangible asset. Clear? Is that clear? So this control was one of the aspects when you are looking at the three leg of the intangible asset definition. This control is also one of the aspects which one needs to take care of. Okay. So you remember we discussed asset is a resource controlled by the entity as a result of past event which provide a future economic benefit in terms of revenue, in terms of cost saving, in terms of other benefits, right? So these are the example of future economic benefit. So the entity can expect some benefits in the future. For example, the entity is using that intangible asset and the entity is using some IPR, patent, formula, and the entity has a cost savings by that. The entity is generating more revenue. So these are the future economic benefits. Correct? So my dear friends, this was more from the theoretical part, just make you guys understand. In your examination question, when question will say that a question has given you some sort of, intangible asset, okay? And the question is giving you the hint that it is a non-physical substance, you will be able to understand it is a non-monetary asset. And the question is digressing you that, while the fair valuation of the customer list or market share, the fair valuation of the customer list or market share is rupees 50 crores. The fair value, the question is given you for the market share. And the question is also given you that, the company is not able to sell the market share independently, but the company can realize, or because it is having a fair value, when the company will be sold out, the market share, the value of the market share will also be realized from the potential buyer. So question is giving you a lot of hints. क्वेश्चन में क्या बोल रहा है, मार्केट शेयर की फेयर वैल्यू बता दी आपको. क्वेश्चन के अंदर ये भी बोल दिया कि जब कंपनी बिकेगी तो इस मार्केट शेयर की वजह से कंपनी को अच्छा पैसा मिल जाएगा बायर से, कंपनी को, नॉट मार्केट शेयर को, कंपनी को मार्केट शेयर की वजह से, राइट? सो क्वेश्चन में आपको क्वेश्चन में बहुत सारे नंबर्स मिलेंगे. क्वेश्चन विल गिव यू लॉट ऑफ थिंग्स एंड द क्वेश्चन इज आस्किंग that compute or determine the cost of the intangible asset, or determine the value of the intangible asset, market share intangible assets. In that case, friends, you need to write, in this case, the intangible asset is a non-monetary asset without having, is an identifiable non-monetary asset without having physical substance. While market share does not have a physical substance, and market share is probably a non-monetary item, market share is a non-monetary item, market share is a without physical substance, but it does not meet the criteria of identifiability, because market share is neither arising from contractual or legal rights, nor market share is separable. It is given in the question, that the company will be able to realize the potential of market share only when the company will be sold out, right? It seems that market share is not identifiable, and hence whatever amount the company is investing in increasing the credibility of the company, in increasing the revenue of the company, so those amounts should be recognized as an expense, not to be recognized as an intangible asset, right? Is that clear, friends? Is that clear? Yeah. Recognition criteria. Friends, you remember 2 recognition criteria I told you in PP? The future economic benefit should be payable. The future economic benefit should be, the future economic benefit should be there. It is probable. Future economic benefit should be probable, and cost can be measured reliably. Future economic benefit is probable and cost can be measured reliably. In PP, there were only 2 conditions. Future economic benefit should be probable, cost can be measured reliably. In intangible asset, the third condition is also there. It should meet the definition of intangible asset. Why this third condition was inserted? If this third condition would not have been there, there is no difference between the recognition criteria of PP and recognition criteria of intangible asset, right? So that is why this third condition is also there. While future economic benefit should be probable, cost can be measured reliably, but it should meet the definition of intangible asset. It should be an identifiable, non-monetary asset without physical substance, right? Without physical substance, okay? And friends, whenever intangible asset is acquired, it has to be initially measured at cost. It has to be initially measured at cost, okay? Is that clear? Whether everything is clear so far? Everything is clear so far? So we have also covered illustration 1, 3, and 4, right? So this example which I have taken in this PPT, this example of control, this is not illustration number 4, illustration number 2 of ICAI study material. Okay. Any questions so far? Any questions so far? Yeah. Let's go to the Excel file. So friends, we discussed that. We discussed the recognition criteria. What is the recognition criteria? What is the recognition criteria? 3 conditions. What is the first condition? Future economic benefit. Future economic benefit. Economic benefit should be probable, plus future economic benefit should be probable, plus cost can be measured reliably. Cost can be measured reliably, plus what? Should meet the definition.
It's the definition of intangible asset.
Intangible asset. What is the definition? Identifiable, non-monetary asset. NMI, can I write NMI? Non-monetary asset, NMA, plus without physical substance. Okay. If these 3 conditions will be satisfied, then that item has to be recognized as an intangible asset. Then initial measurement. Standard says that it has to be initially measured at cost. It has to be initially intangible asset has to be measured at cost. Now we are discussing mode of acquisition. Okay. How this intangible asset is going to be acquired, because the measurement depends on the mode of acquisition. First mode, either intangible asset has to be acquired by way of separate acquisition. What is meant by separate acquisition? You went to the market and you purchased Tally software. What is that? Separate acquisition. आपने खरीदा है. You went to the market and bought Tally software. So Tally software costed you 50,000 rupees. It is a separate acquisition. What is the cost of that software? What is the measurement of that software at cost? Which is 50,000. 50,000 rupees. And this software is not like a plug and play. Some computer engineer, some software engineer has to visit your premises and he has to install that software in your machine, right? And he is charging a installation fees of 5,000 rupees. What is the cost of this software? At what value this software is going to be measured?
55,000.
55,000 means cost of the software plus directly attributable cost. Purchase price. You remember PPE? Purchase price, non-refundable purchase taxes minus. You got a discount of 20% on Tally software. Trade discount मिला आपको 20% का. 50,000 तो MRP था. What is the cost? What is the cost? 50,000 MRP, 20% discount.
40,000.
40,000 plus 5,000 installation. 45,000 is the value of the intangible asset. So you understand separate acquisition. Okay. You went to the market, you buy an intangible asset, you went to the government and you bought an intangible asset license. 50,000 crores you have paid. So that is a separate acquisition. Okay. So pretty simple. Then part of a business combination. You are acquiring some another business. You are acquiring some other company. Sun Pharma is acquiring Ranbaxy. Why? Because of some intangible, not for the goodwill. Because of some intangible, because of some generic medicine formula. Right? So how to measure intangible asset when intangible asset forms part of a business combination? We will discuss that. Government is giving some intangible asset. The government told the companies, please install your plant in the remote areas. We will give you airport landing right free of cost. We have developed a small airport. There is an army airport and you can land your helicopters and small planes on that airport. We will not charge any landing fees. So what is that? Airport landing rights. This is an intangible asset. The government is giving free of cost, means by way of government grant. Correct? There could be some internally generated intangible assets. So how to measure internally generated intangible asset? For example, in case of pharmaceutical companies, they are spending a lot of money in research, in coming out with a formula, and that formula is an intangible asset. So how to measure that intangible asset? Okay. So internally generated intangible asset, internally generated goodwill, we'll talk about. Exchange of asset. The company is acquiring one intangible asset and the company is exchanging. The company is paying not in terms of money, the company is paying in terms of some other assets and the company is acquiring an intangible asset. What is the cost of intangible asset acquired? At what value intangible asset is going to be measured? So friends, we will be discussing in detail with the help of illustrations from ICAI study material. We will be discussing in detail this part one by one. Okay, let's move on. Abrakesh, do you have a question?
Yes, sir. Sir, in case of a service tax period,
government excise and service tax. Sorry, government used to give excise benefit if we establish a plant in the Baddi area or Sikkim. So is it a part of intangible asset? I mean, then how can it be measured?
Answer is no. It is not a part of intangible asset. It is not a part of intangible asset, right?
Okay.
Because you will receive the excise duty benefit when you will do the production, right? If someone will tell you today, will you able to, sold this rights to anyone else until and unless you will not do the production? Even as on balance sheet date, if you will not do the production, you will not get that right. Okay.
Yes, that's
So are you
yes,
getting me? कि आप कैसे
yes,
मेजर
sir.
करोगे? आप बोलोगे अगले 10 साल तक मुझे
Okay.
एक्साइज ड्यूटी पे नहीं करना, अगले 10 साल तक
Yes,
मैन्युफैक्चरिंग
yes,
में. So
yes.
you say that 10,000 crore तो मैं आज ही कैपिटलाइज कर लेता हूँ, जबकि आपने प्रोडक्शन ही नहीं किया.
Okay, done.
It is
Got it, sir.
dependent. It is dependent on the future outcomes. Okay.
Thank you.
Government is giving you tax holidays. You are not required to pay any taxes. And I have seen a lot of companies in gift city entity, right? So in Gujarat, there is a gift city entity. There is a gift city in Gujarat where government is giving 10-year tax holiday to promote the business there, right? If there is a company which is into losses, right? तो tax holiday का फायदा क्या है? Are you getting me? So tax holiday will be beneficial in the year in which the tax liabilities are there, in which the income is there. Correct? So these are not an intangible assets. This is not dealt by Ind AS 38, right? These will be dealt by Ind AS 12, which says that, okay, do we need to create a deferred tax asset on the losses, right? So you have to evaluate according to Ind AS 12, not as per Ind AS 38. So let's talk about the separate acquisition. You remember when we were discussing PPE, property, plant and equipment, the same diagram I have shown you, but that diagram has 3 legs, 3 parts. And I've told you PPE has to be measured at cost, initially measured at cost. Same line I'm repeating, intangible asset has to be initially measured at cost. The cost includes purchase price. For example, the purchase price of Tally software is 50,000 rupees, including import duties. If you are importing a license from some overseas countries, probably if you are paying some import duty, that has to be added to the cost of the asset. And non-refundable purchase taxes. For example, you are paying a GST of 18% on 50,000 rupees of Tally software. So 50,000 plus 18% of 50,000, 9,000. So your total cost will be 59,000 if you will not be able to receive the credit of GST. But if you can get the credit of GST, in that case, what will happen? Whether the GST will form part of the cost of the asset? Answer is no. वो GST credit अपने आप में एक दूसरा asset है, right? It will not form part of the cost of the asset. So purchase price plus import duty plus non-refundable, non-creditable purchase taxes minus trade discount and rebates plus directly attributable cost of preparing the asset for its intended use. Here the word intended use or sell is not there. Why the word sell is not there? Why the word intended use is there? Intended use or sell. Only intended use is there. Because if it is for sell, it is not capitalized as an intangible asset. It will form part of your inventory. Correct? So here we are talking about tangible asset, intangible asset, PPE intangible asset. We are talking about non-current asset, which is used in the business, not for the purpose of sale. Okay. Plus directly attributable cost. For example, installation fees. For example, registration fees. Some licenses require some registration. Okay. So these are the directly attributable cost. Okay. Friends, in PP, the third item was there, decommissioning cost, the cost of dismantling, decommissioning, etc., etc. Why the decommissioning cost or cost of restoring, decommissioning, cost of retiring, why that cost is not there in intangible asset?
Because you will anyways amortize the asset over the period of and there's no physical changes that happens to where you are establishing the asset.
Yes. So the second part is relevant, Nisha. In PP, you are creating a tangible structure. You are creating a tangible structure, right? And hence, there will be a cost in future when you will deinstall, when you will decommission, when you have to restore the site, you have to dismantle that asset, right? So there is a cost. But since intangible asset does not have a physical substance, does not have a physical existence, does not have a physical structure, what to decommission? आप किसको deinstall करोगे? आप किसको dismantle करोगे? आप किसको decommission करोगे? Correct? So that is why in intangible asset, the third part is missing, right? The third part is not there because intangible asset cannot be dismantled, right? Because it is intangible, it does not have a physical substance. But for tangible asset, the same definition is there plus cost of dismantling and site restoration obligation. Okay. So in case of a separate acquisition, the cost includes purchase price plus import duty plus non-refundable taxes minus discount and rebates plus directly attributable cost of preparing the asset for intended use. So what are the costs included? Cost of employee benefit, professional fee, cost of testing, installation fee, etc., etc. Cost not included, launching a new product, including advertising and promotional expenses. If the company has done some advertisement, it is not a part of intangible asset. It has to be expensed off. If the company has spent some training expenses for operating a business in a new location, answer is it is a training cost and it is going to be expensed off in the P&L. Administration and other general overhead cost like your audit fee, like your security guard expenses, like your admin nature of expenses. So these are also not form part of your intangible asset. Same concept which we have read in Ind AS 16. Correct? Is that clear? So friends, while we understood that whenever we'll go and buy the intangible asset, it has to be measured at cost. But what happens if the company is paying on the deferred settlement terms? I went to buy a tele software. Okay. I asked, what is the price of Tele 9 ERP? The vendor told me it is 50,000 rupees. And I told him that I need a credit period. I don't have money right now. The vendor told me normally we will provide a credit period of 7 days to all the chartered accountants. Right? You have to give me your visiting card and we will deliver at your premises. My mechanic, my software engineer will come and he will install and you have to pay me in 7 days. 7 days of, let's say it is a trial period also. So you can pay me after 7 days. We are providing 7 days credit. And the price is 50,000 rupees. Okay. Then I told him that no, I don't have money right now. And I will not be able to pay you in 7 days period. I will be able to pay you after 6 months. He told me, then my price is 55,000 rupees. Now question is, at what value, in this case, at what value this intangible asset is going to be recognized? At what value this intangible asset is going to be recognized? If I'm paying on this deferred settlement terms, I'm paying on deferred credit terms, I have to pay 55,000 rupees. So this 55,000 has two elements. One is I'm paying for acquiring tele software. Number two, I'm paying for the credit period. I'm paying for the credit facility, means I'm paying for interest. I'm paying interest. So I'm paying for tele software and I'm paying for interest because I'm using the credit facility for a period of 6 months, right? And that is why I'm paying an interest. So friends, this is the same slide. This is the same part which we have discussed in Ind AS 16. If the payment for an intangible asset is deferred beyond normal credit terms, the cost of intangible asset is the cash price equivalent, right? And if there is a difference between consideration paid and the cash price equivalent, in this case, the cash price equivalent is 50,000 rupees. The consideration payable is 55,000 rupees. The difference between the cash price equivalent and the total payment, total consideration, is recognized as interest over the period of credit, unless such interest is going to be capitalized as per Ind AS 23. If such item is qualifying asset, then this 5,000 interest is going to be capitalized. Otherwise, this 5,000 interest is going to be charged in the P&L, right? Do I need to explain this again? Do I need to explain this again, my dear friends? Friends, let's discuss illustration number 4 of ICAI study material. Let's discuss illustration number 4. Okay. And with this illustration, we will be covering what? We will be covering the two parts. Number 1, separate acquisition and the deferred payment terms. So Ginny, if a company is acquiring an intangible asset on a deferred payment terms, on a deferred credit terms, right? In that case, intangible asset has to be measured on the basis of cash price equivalent. If I will buy tele software today, what is the price on the basis of normal credit period, which this supplier is giving to everyone? For example, the price is 50,000 rupees. But why he is charging 55,000 rupees from me? Why he is charging 55,000 rupees from me? He is charging 55,000 rupees from me because why? Because I am utilizing a extended credit period. Okay. And hence he is charging me for the purpose of interest, not for the purpose of that software. Okay. Because he is giving me a credit facility for 6 months. Okay. So standard says that the total consideration payable minus cash price equivalent has to be recognized as an interest, not as your intangible asset. Same concept which we have covered in Ind AS 16. Okay. Let's discuss illustration number 4. Friends, whether my voice is clear, because one of the student is saying my voice is breaking.
Yes, sir.
Sorry. Whether my voice is clear to everyone? Okay. Vignesh has confirmed it is fine. Mamta has also confirmed. Okay, let's discuss illustration number 4 of ICAI study material. Illustration number 4. Okay. Yes. OBC Inc. acquired a software. This is a company. This company has acquired a software for its internal use, costing rupees 10 lakh. What is the purchase price? What is the purchase price? 10 lakh rupees. The amount payable for the software was rupees 6 lakh immediately. But for this 10 lakh rupees of software, the company is paying, this OBC Inc. company is paying 6 lakh immediately and 4 lakh in 1 year time. And 4 lakh in 1 year time. What does it mean? It means the company is doing a part payment immediately and the balance payment the company is settling on a deferred payment terms. The balance payment the company is deferring. Okay. And the company is making a balance payment on a deferred payment terms. Right? The company is not making the payment right now. It is on a deferred payment terms. Okay. So friends, 6 lakh immediately and 4 lakh in 1 year time. Right. So what to do? What to do with this 4 lakh? Is there anything which we need to do for this 4 lakh rupees?
We have to separate interest component from that 4 lakh.
We have to separate interest component from this 4 lakh because this company is ready to collect 4 lakh rupees after 1 year time. It means there are two obligations from the part of supplier. The supplier is selling the goods and the supplier is also providing a credit facility. From the perspective of a buyer, buyer is purchasing the goods and buyer is also getting the credit facility, right? Right? So the buyer will pay the consideration for the sake of two items. Item number one, buyer is getting a product. Item number two, buyer is getting a credit facility, loan facility. Okay, understood. Then the question has given you purchase tax. Purchase tax. So can you go on mute, please? Yes. So the company has also given given a purchase tax. The company has paid a purchase tax of rupees 1 lakh. So what to do with this purchase tax? Purchase price plus import duty plus non-refundable taxes minus discount and rebate. We need to add this plus entry tax 10%, but it is written that it is recoverable later from tax department. It is recoverable. What to do with this entry tax of 10%? It is recoverable. So it will not become part of your cost of the asset. It has to be excluded. Then this company has paid a legal fees to acquire this software of 87,000. This legal fees is again a directly attributable cost. It will become part of your cost of asset, right? This company has also given a consultancy fee for implementation, 1,20,000 rupees. Installation fees, 1,20,000 rupees. This company has paid. What to do with this implementation or installation fee? 1,20,000. This has to be added to the cost of the asset. This has to be added to the cost of the asset, right? It is a directly attributable cost. In this question, the cost of capital of 10% is given. Is there any use of this 10% cost of capital?
To bifurcate that 4 lakh rupees into principal and interest component amount.
Yes, you are right. To bifurcate the 4 lakh rupees between the principal and interest. So we have to discount the 4 lakh rupees which has to be payable after 1 year. I have to take the present value of this 4 lakh rupees. So 4 lakh divided by 1.1. It will give me the present value of the 4 lakh rupees which has to be payable after 1 year. So let's solve this question. So what cash I am paying upfront? I am paying upfront cash of rupees 6 lakh and 4 lakh divided by 1.1, which is 3,63,636. So what is my cost of the asset? My purchase price, not cost of the asset. My purchase price is 9,63,636, right? But I have to pay 10 lakh rupees. So the remaining 36,334 rupee will go to the interest, okay, in the P&L. Then there is a purchase tax 1 lakh rupee. It has to be added to the cost of the asset. Entry tax, since entry tax is a refundable tax, it is not required to be added. Legal fees is a directly attributable cost. Consultancy fee is a directly attributable cost. And this is a total cost to be capitalized, right? So this is the solution of the question. This is what we have discussed as a part of the separate acquisition and as a part of the deferred payment terms.
106 irukku, sir.
Sorry, can you repeat, please?
நீங்க 10:30 லாக் இன் பண்ணிடுங்க சார். பிகாஸ் பிசிக்கல்ல 4 தான் இருக்கு, சரிங்களா? ப்ரெஸ் மேட்டர்ஸ் வந்து ஒரு 13 இருக்கு. அதுக்கப்புறம் நான் ப்ரையாரிட்டி லிஸ்ட் ஒரு 5 and admission for IRC report தான் நம்மளுக்கு ஃபர்ஸ்ட்.
Nisha, can you go on mute? So is this clear to everyone, friends? Is this clear to everyone? Illustration number 4 is clear to everyone? Any question, any doubt? I'm just taking a 30 seconds pause. Otherwise, I'll move to the next part. Is it clear to everyone, guys? Just give me a minute. I got a confirmation from 5 students so far. Yes. Okay. Let's move to the next part. Friends, so we understood that whenever the asset software is separately acquired or purchased, it is recognized at cost, which is purchase price, including of non-refundable taxes plus directly attributable cost incurred for its intended use. Abrikesh, do you have any question? Do you have any question?
No, sir. No, sir.
Okay. So are you able to see my screen? Because one of the student is complaining that screen is not visible. Okay, it is visible. So probably there is a problem. So let me share it again while it is visible to the other participant, but I'm sharing it again. So student, I think you need to log out and then again log in. Probably there is a problem from your end. So now let's discuss the second part, acquired in business combination. So one of the student was asking, sir, how should we measure the intangible asset when we are acquiring the intangible asset in a business combination? When we are acquiring a business and we got some intangible asset, how to measure those intangible asset? Friends, standard says that when you acquire intangible asset in business combination, right? So the value of the intangible asset is a fair value. For example, the company has acquired another company. Why? Because that company the company was dealing in let's say Sun Pharma has acquired Ranbaxy. Okay. And why Sun Pharma is acquired Ranbaxy? Because Sun Pharma wants to access the generic medicine formula of Ranbaxy. Right. And Sun Pharma predicts that due to that formula, I will be able to achieve a sale of, let's say, 10,000 crores in the next 5 years, and I will be able to earn the profit of rupees 2,000 crore, for example. Okay. Because the Sun Pharma has a huge, sales network. Now what happened? For acquiring Ranbaxy, Sun Pharma is, let's say, paying a consideration of 5,000 crores. Right. And the total value of the tangible asset of Sun Pharma, the total value which is coming into the books of Ranbaxy, not Sun Pharma, Ranbaxy, the total value. So Sun Pharma is acquiring and paying a consideration of 5,000 crore. In return, Sun Pharma is acquiring Ranbaxy, means the assets and liabilities of Ranbaxy. So the total fair value of the net assets is, let's say, 3,000 crores. जब भी कोई एक्विजिशन होगा, आप उसका कंपैरिजन एसेट्स की फेयर वैल्यू से ही करोगे ना? Right? Yes or no? Let's say Vignesh has a company, okay? And in that company, there is a land. And Vignesh has purchased that land in that company 10 years back at a price of 50 lakh rupees. The current market price of that land is 50 crore rupees. 10 साल पहले विग्नेश ने 50 लाख रुपीस में खरीदी थी उस कंपनी के अंदर लैंड. विग्नेश इज द डायरेक्टर. एंड अब उस लैंड की वैल्यू 50 करोड़ रुपीस हो गई. विग्नेश वांट्स टू सेल दैट कंपनी and this land belongs to that company. No other assets are there in that company. Tell me, in the books of accounts, Vignesh is carrying that land, carrying that PP on the cost model. Means cost pe aati hai. So today, if you look at the balance sheet of that company, it is showing at 50 lakh rupees. The land is showing at 50 lakh rupees. So tell me whether when I need to acquire that company, I will pay the consideration as per the cost price of that land or as per the fair value of that land? As per the fair value of that land. Correct? Vignesh will say that the assets which belongs to this company has a fair value of 50 crore minimum. So you have to pay accordingly. So friends, Sun Pharma is paying 5,000 crore for acquiring Ranbaxy. The Ranbaxy fair value of the assets is 3,000 crore. Why Sun Pharma is paying additional 2,000 crore? because of the formula which Sun Pharma will be able to access, and Sun Pharma will have the future economic benefit. So Sun Pharma will measure that formula on the basis of fair value. Sir, uska fair value kaise milega? So friends, there are a lot of business valuer who will project due to this item, due to this asset, what is the value of the future economic benefit the company will receive in future, right? For example, they predict that due to this formula, the company will be able to receive the future economic benefit only in the next 5 years, amounting to rupees so and so. Then they will discount the cash flow and arrive at a fair value of the formula. For example, it comes out at 800 crores. 3,000 crore is the fair value of the total assets, net assets. 800 crore is the fair value of this formula. This Sun Pharma needs to capitalize as an intangible asset. What is remaining 1,200 crores? 5,000 minus 3,000 minus 800. What is remaining 1,200 crores? The remaining 1,200 crores will goes to goodwill. Goodwill is the residual amount, right? If you are not able to determine the specific intangible asset, the remaining value goes to the goodwill, right? So friends, intangible asset in case of business combination, cost equals to fair value at the acquisition date. Intangible asset is recognized separately from goodwill if fair value is measured reliably, and even if those intangible asset has not been recognized by the acquirer in its books of accounts, right? So because the acquirer is paying for those assets, like market share, you remember, market share will never be capitalized in the acquirer books, but acquirer can capitalize the market share. Why? Because the acquirer is paying for that. Is that clear? Let's discuss. Let's understand this illustration number 5, right? To understand how to measure the intangible asset in case of business combination. On 31st March 2001, Earth India Limited has paid rupees 50 lakh for 100% interest in Sun India Limited. So Earth paid 50 lakh rupees to acquire Sun India Limited. At that date, Sun Limited net asset had a fair value of 30 lakh rupees. Okay. So friends, the fair value of the assets of Sun Limited is 30 lakh. The company is paying 50 lakh. So what is the treatment of the balance? 20 lakhs. Let's see why this company is paying additional. If no any information is given in the question, the balance 20 lakh is goodwill. In accounting standard, it is always goodwill. In Ind AS, it is goodwill if nothing is given in the question. But this question has given some additional information. In addition, Sun Limited also held the following rights. Trademark named Grand, valued at 1,80,000 using a discounted cash flow technique. So there is one trademark, and this company, Sun India, have not recognized the trademark. Why? Because probably it is internally generated and it was not having any significant value. But this company, Earth India, is predicting that we will be able to receive some future economic benefit due to this trademark. We will sell our product under the trademark, which is Grand, and the fair value of the trademark using a DCF valuation technique, the fair value comes out at 1,80,000 rupees. Okay, 1,80,000 rupees. The sole distribution right to an electronic product, right? Then there is another intangible asset also. This company, Sun India, has a sole distribution right. This company, Sun India, has a sole distribution right of a product. The future cash flow from which are estimated to be rupees 1,50,000 per annum for next 6 years. So this company is also expecting, Earth India is also expecting to receive 1,50,000 rupees per annum for next 6 years, means total 9 lakh rupees. 10% is considered an appropriate discount rate. 6 year, 10%. Annuity factor is 4.36. I don't know why this 6-year 10% annuity factor is given in this question.
So this distribution rights future cash flow has been given. For that purpose, we have to discount it using that discount factor given.
So we have to do this transaction we have to do the recognition on the transaction date. On 31st March 2001, when this business combination transaction is happening, the company is, Earth India is paying a consideration 50 lakh rupees. Earth India is acquiring the net assets 30 lakh rupees at fair value. Earth India is also acquiring a trademark, the valuation which comes out at 1,80,000 rupees. Earth India is also getting a sole distribution right of a product for which the cash flows are given 1,50,000 for the next 6 years. But what is the present value of the future cash flows? Because we are measuring on the transaction date. So 1,50,000 multiplied by 4.36 will give you the present value as on date, right? So we have also arrived at the value, fair value of the sole distribution right. Now calculate goodwill and other intangible asset arising on acquisition. So how will we calculate this? Purchase consideration 50 lakh, net asset acquired 30 lakh, trademark 1,80,000, distribution right 1,50,000 multiplied by 4.36, which is 6,54,000. The total is 38,34,000. What is the goodwill? The remaining amount is goodwill. 11,66,000 is the goodwill. Remaining amount is the goodwill, right? So have we understood that how to measure the intangible asset and goodwill in case of business combination? Goodwill is always the residual amount. Goodwill is the difference between purchase consideration minus net assets fair value minus other intangible assets at fair value. Sir, if in this question, this trademark and distribution right has not been given, then the entire amount of 20 lakh would be goodwill. Correct? So we have covered this illustration number 5 also from ICAI study material. Correct? Can we move to the next part? Can we move to the next part? Let's go to the exchange of assets. Let's go to the exchange of assets. Okay. Now, friends, let me take you to the Excel file. And again, I am repeating the concept which I have explained in Ind AS 16 PPE. So, friends, we discussed mode of acquisition and we discussed three aspects in the mode of acquisition. In the mode of acquisition. Number 1, we have discussed separate acquisition, right? We have also discussed acquisition on deferred payment terms, right? Then we have discussed measurement of intangible assets in case of business combination, right? So we discussed these 3 aspects, correct? Now we are discussing exchange of assets. Exchange of assets. Can you tell me if a company is acquiring an intangible asset, at what value the intangible asset is going to be measured in case the company is not settling in cash? In case when the company is not settling in money, in cash, the company is settling in some other assets. It's like a barter.
Asset given up, sir.
Asset given up. Just think logically. If you have to buy some asset, what you are required to pay? Money, cash. So whatever you are paying, you are recognizing the asset on the value which you are paying, correct? Again, if you are acquiring an asset and you are settling, you are paying in the form of an asset. What you are paying? Asset. You are giving an asset, na? So jo asset aap de rahe ho, whatever you are giving as a consideration. So whatever is the fair value of that consideration, fair value of that asset, fair value of asset given up will become the cost of intangible asset acquired. Okay, it will become the cost of intangible asset acquired. Is that clear? समझ आया? Friends, if the transaction is having commercial substance, you remember we discussed commercial substance in Ind AS 16. I am acquiring a tele software and I am giving a tele software. Whether this transaction is having any commercial substance? Answer is no. So we are exchanging the same nature of asset, which is having a same cash flows, same risk, same nature, same purpose, same usage. Correct? So this transaction does not have a commercial substance, but I am acquiring a software. In return, I am paying through my furniture. Means I am giving furniture and I am buying tele software. Whether this transaction is having a commercial substance, answer is yes. Answer is yes. Right? So because the nature, purpose of the furniture and software are totally different, the cash flows may be completely different. Correct? So friends, if the transaction is having a commercial substance, the asset acquired will be recognized at a value in the descending order. At a value in the descending order. Right? What does it mean? What does it mean? The first priority has to be given fair value of the asset given up. Fair value of the asset given up. Given up. If answer is yes, it is available. Yes, it is available. Record, recognize, or measure intangible asset acquired at fair value of asset given up. If it is not available, in case the above is not available, जो मैंने एसेट सरेंडर किया उसकी फेयर वैल्यू अवेलेबल ही नहीं है, then what you need to see? Then what you need to see?
Fair value of asset received.
Fair value of asset received. Very good. Very good. Fair value of asset received. Fair value of asset acquired. I hope my Excel file is visible to all of you, right? Fair value of asset acquired. Check whether it is available. For example, yes, it is available. Yes, it is available. Measure intangible asset acquired at fair value of asset acquired. In case the above is also not available, neither fair value of asset given up is available, nor fair value of asset acquired is available, then what to do?
We have to derive it.
We have to?
Observable factors, we have to derive it.
So basically fair value is something which you need to derive, and you have engage a valuer. So valuer is looking at all the facts and circumstances, but he has found that the fair value of asset given up is not there, even it cannot be derived. Fair value of asset acquired is not there, even it cannot be derived. What to do? क्या करें? Recognize ही ना करें. We don't need to recognize this intangible asset.
Estimate, sir.
Sorry?
Estimate.
You are estimating, but you cannot find any estimate. You guys have forgot Ind AS 16.
Same industry की price जो किसी और business
वो भी available नहीं है. I don't know why you guys are not applying your mind. You are acquiring one asset and you are giving one asset. तो जो asset आप दे रहे हो वो आपकी books में है या नहीं है?
Value of that asset in the books of acquiry we will use.
So whether you have the value of the asset which is there in your books of accounts, which you are surrendering, which you are giving as a consideration. Yes?
Yes,
आपके
sir.
बुक्स में तो है ना, तो उसका WDV भी तो होगा, उसकी कैरिंग वैल्यू भी तो होगी.
So value which is more reliable.
So we don't have fair value. I told na, fair value of asset given up is also not there. Fair value of asset acquired is not there. दो ही तो ऑप्शन होते हैं, या तो कैरिंग वैल्यू होगी या फेयर वैल्यू होगी. दो ही तो एसेट हैं, या तो जो एसेट आप ले रहे हो या जो एसेट आप दे रहे हो. आपके पास सबसे पहला ऑप्शन है कि आपको यूज करना है फेयर वैल्यू ऑफ एसेट गिवन अप. दूसरा ऑप्शन है आपको यूज करना है फेयर वैल्यू ऑफ एसेट एक्वायर्ड. अगर आपके पास दोनों फेयर वैल्यू हैं तो आपको कौन सी फेयर वैल्यू यूज करनी है? एसेट गिवन अप, राइट? दैट कम्स फर्स्ट इन द प्रायोरिटी. अगर आपके पास दोनों फेयर वैल्यू नहीं है तो जो फेयर वैल्यू अवेलेबल है आपको वो यूज करनी है, करेक्ट? पर अगर आपके पास दोनों ही फेयर वैल्यू अवेलेबल नहीं है तो क्या करना है? देन
Carrying cost.
yes, then your new asset, your intangible asset acquired will be measured at WDV, carrying value of the asset given up, right? Okay, so then in that case, intangible asset acquired will be measured at carrying value WDV of intangible asset acquired will be measured at what value? Measured at carrying value WDV of asset given up. Correct? WDV of asset given up. Example, A Limited acquired a broadcasting license. Okay. In return for in exchange of its car. Okay. The fair value, the details of the assets are given below. Please advise the cost of license. Please advise the cost of license in the below circumstances. Please advise the cost of license in the below circumstances. Okay, friends, this example will clear all your problems, all your doubts, all your queries, right? So situation one. Okay, situation one. Fair value of license 50 lakhs. All the amount is in lakhs. Fair value of car 35 lakhs. WDV of the car 30 lakhs. Situation one, you have all the fair values. You have fair value of license, you have fair value of car, and you have WDV of the car also, because it is there in the books of accounts. So WDV to hogi hogi. Tell me in this question, at what value license will be measured? What will be the value of broadcasting license?
50 lakhs, sir. Fair value of license. So exchange for cars. Sorry. Car values, sir.
What you guys are acquiring? Abracase, what you are acquiring?
License.
What you are paying?
Car.
अगर आपने कार की जगह पैसा दिया होता तो किस पे करते? जितना पैसा दिया उतने पे करते. तो अभी आपने क्या दिया? आपने कार दी, कार की फेयर वैल्यू क्या है?
35 lakhs.
अगर इस कार को आप एक्सचेंज नहीं करते, यू गो टू द मार्केट, यू सेल द कार, एट व्हाट वैल्यू यू विल सेल द कार? Market
35.
35 lakh.
35.
You sell the car, you got 35 lakh, you go to the license entity, you pay 35 lakh, you got the license. Correct? So
Yes.
in this case, fair value of license is given, fair value of car is also given. So which is the first priority?
Car.
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 Fair value of
Given
the
away.
yes. So accounting entry will be license account debit, license account debit, 35 lakh to car account. But car will be credited by 35 or 30?
It will be created by 30.
30.
WDV.
वो तो फेयर वैल्यू है, मार्केट वैल्यू है. बुक्स ऑफ अकाउंट्स में तो 30 है ना, उसकी फेयर वैल्यू मार्केट वैल्यू बढ़ गई उस कार की, मींस टू प्रॉफिट ऑन एक्सचेंज. Right? Second part. Let's discuss the situation number 2. Situation number 2. Situation 2. Fair value of license not determinable. Tell me, what is the fair value of the, at what value this broadcasting license is going to be recognized?
35 lakhs.
35 lakhs. Your fair value of asset surrendered is given, right? So this is the first option. Of course, this was the first option. So this is 35. What is the accounting entry? What is the accounting entry? Same. License account 35. Okay. Situation number 3. I hope you are enjoying these different scenarios, which will make all your doubts clear when you refer these notes. Fair value of license 50 lakh. Fair value of car not determinable. So asset given a fair value is not given, but this asset acquired fair value is given. Which fair value you need to refer?
License.
50 lakhs.
50 lakh.
50 lakhs.
This broadcasting license will be at 50 lakh. What is the accounting entry? License account debit. License account debit at 50 lakh, right? But car will be credited by WDV 30 lakh. What is the profit? 20 lakh. Situation number 4. Fair value of license not determinable. Fair value of car not determinable. WDV of the car is given 30 lakh because this is there in the books of accounts. What is the value of broadcasting license?
30 lakhs.
30 lakh. Very good. What is the accounting entry?
License account debit to car, both at 30.
License account debit to car. There is no profit. अभी भी कोई doubt है? Is there any doubt? Yes or no? I have given you all the scenarios. I have given you all the situations, right? In case of exchange of asset, along with the accounting entries. Okay. So students, I am concluding my session now. So from the morning, we have discussed the meaning of intangible asset. Intangible asset is an identifiable, non-monetary asset, right? Without having physical substance. We discussed what is meant by non-monetary asset. Non-monetary asset are those assets which are not a monetary asset. What is a monetary asset? Monetary asset are those assets which are going to be settled or which are going to be received in a fixed unit of cash. Okay, in a fixed unit of currency like trade receivable, cash, bank, etc. Without physical substance means which does not have a physical existence. Friends, if an asset has a combination of physical and non-physical substance, means tangible and intangible, you have to see which component has a significance, which component has a significance, okay, which is the more significant component. Like in case of computer, laptop and operating software is an integral part of the computer laptop. So computer laptop has to be capitalized as a PP. It is not required to be capitalized as an intangible asset. It is or intangible asset and tangible asset are not required to be splitted separately. Okay, your computer laptop has to be a tangible asset, right? It has to be a PP. In case of a robot, the significant component is the programming, software, artificial intelligence. So in that case, that robot has to be capitalized as a intangible asset, not in the split of tangible intangible, or as a tangible, it has to be intangible asset, right? This is what we discussed. For identifiable, for meeting the definition of identifiable, that asset either has to be separable or that intangible item needs to be arising from contractual or legal rights. Separable means that item can be sold out separately from the business. Without selling the business, that item can be sold out or can be rented or can be exchanged. Okay. Then we discussed intangible asset has to be initially measured at cost, right? And intangible asset, any asset has to be recognized as an intangible asset if it meets the definition of intangible asset. Future economic benefit should be probable and cost can be measured reliably. Friends, then we discussed there are various modes of acquisition of intangible asset. If intangible asset is acquired separately, means you are purchasing. So you have to measure at cost. Cost includes purchase price plus import duty plus non-refundable taxes minus trade discount and rebate plus directly attributable cost, right? So what could not be a directly attributable cost? For example, you are paying some advertisement for advertisement. It is not a directly attributable cost. It has to be recognized as an expense. For example, training fee. It does not recognize as an intangible asset cost. It has to be recognized as an expense, right? For example, general and administrative overheads. It is not an intangible asset cost. Okay. Then we discussed in case of deferred payment terms. So the company which is acquiring intangible asset is deferring or delaying the payment. In that case, standard says that intangible asset has to be acquired on the normal cash price equivalent, right? Whatever consideration the company is paying versus whatever is the cash price equivalent, the difference will go to the interest. That is what we discussed. Then we discussed if intangible asset is acquired in a business combination, the intangible asset is acquired, the intangible asset is recognized at fair value. Whatever consideration you have paid, right? From the consideration, you need to deduct fair value of the net assets. Then you need to deduct fair value of the potential intangible asset, right? Then whatever balance is there, it will go to goodwill. Then we discussed in case of exchange of asset. So in case of exchange of asset, if commercial substance exists, in that case, you have to determine the intangible asset acquired at fair value, right? So which fair value? The first priority is the fair value of the asset given up, right? The second priority is the fair value of the asset acquired. So if both the fair values are given, you have to pick fair value of the asset given up. Okay. If you don't have the fair value of the asset given up, then you can go to the fair value of asset acquired. Okay. But if both the fair values are not given, in that case, simple, you have to recognize the intangible asset acquired at carrying value of the asset given up. Okay. So this is what we discussed today. Thank you so much, friends. It's 10 a.m. now, and I'm concluding my session. If you have any question, would be happy to answer. Otherwise, I am happy to conclude the session for the day. And in the next session, we will complete this intangible asset standard. And with that, we will also covering, repeating, revising the Ind AS 16 as well, like today. Okay. Thank you so much. Thank you, Ginny, for this feedback.
Thank you, sir.
Thank you. Yes, session is over. Thank you.
Thank you, Ashok ji.
Thank you.